Hello everybody. The Washington real estate market has been very hot. If you are a G-4 visa holder and you own U.S. rental property, you probably have been making a fortune. However, that fortune could go up in smoke if you haven't properly filed your U.S. income tax returns. Now today we're going to discuss the mistakes I've seen in practice and how to avoid them. I'll explain the U.S. income tax return filing requirements for G-4 visa holders who have U.S. rental property. But first, let's talk about whether you even have an income tax filing requirement. If you are a G-4 visa holder and are considered an income tax non-resident, which most are, and you have any U.S. rental income whatsoever, you absolutely must file a U.S. income tax return on a Form 1040-NR. This would include rents you receive from renting out an apartment, a house, or any other property. This also includes rents that you may receive from renting out a portion of your home or even just a room. You say, Dale, but what if I incur losses? What if my expenses and depreciation are more than my income? Do I still have to file an income tax return? The answer is, unfortunately, yes, you do. You must report the rental on a Form 1040-NR tax return, no matter if you have net income or net loss from the property. Now, here is the strange and tricky issue of rental income received by non-residents. The general rule, yes, the general rule for non-residents is that rental income, the gross rents that you receive, are actually subject to a 30% flat tax rate unless you make a special election that will allow you to deduct expenses against that income. This is called the net election. If you make the net election, and only if you make the net election, can you deduct any expenses against your rental income. Now, I have no idea why Congress requires the net election. In all my years performing international tax work, I have never had a case where the non-resident wanted to be taxed at 30% on their gross rents. Almost every non-resident will be better off making the net election and deducting expenses related to the property. Now, these expenses would include, but aren't necessarily limited to, mortgage interest, property taxes, maintenance, allowance for depreciation, etc. But again, you only get to take these deductions if you make the so-called net election on a properly filed income tax return. This election is valid indefinitely unless it is revoked. What is the net election? Is it a form? No. You make the net election by simply attaching a self-made statement to your 1040-NR tax return and include a bunch of information that the IRS requires on the statement. Now, I've included a link below to the IRS website that describes what information is needed on the net election statement. I hear you say, but Dale, how will the IRS know if I made a timely net election? Well, here's the scary thing. Beginning in 2018, the 1040-NR tax return, page 5 questions now include 2 questions about if and when you made the net election. By these 2 questions, the IRS will know whether you made a net election before actually deducting expenses. Uh-oh. Now, if you've been receiving rental income but not declaring it, or you haven't made the net election in the past, I strongly suggest that you take care of this problem as soon as possible. If you haven't been filing an income tax return, the IRS has an indefinite amount of time to audit you. And if they discover your unreported rental income, they could assess the 30% flat tax on all the gross rents that you've ever received in the past. Generally speaking, if you come forward on a voluntary basis, however, you will most likely need to submit tax returns for only the prior 6 years. Another common error I see in practice is when a G4 and a G4 dependent spouse jointly own a U.S. rental property and only one of them reports 100% of the rental property on one Form 1040 NR tax return. Now, this might make common sense and it simplifies matters, but this is not correct and it could result in huge penalties and interest, since you can't file a 1040 non-resident tax return on a joint basis. Each spouse instead must report his or her share of the rental income and expenses from a jointly owned rental property. And each spouse must submit their own Form 1040 NR. And of course, each must file the net election. To correct this situation, the spouse that reported all the rental income and expenses may have to report their prior 3 years of income tax returns, and the spouse who hasn't declared any income and expenses from the property may have to file as many as 6 years of prior year returns. So if you feel you need to make any corrections in the areas discussed here today, I strongly suggest that you obtain assistance from a qualified CPA or tax attorney that is especially knowledgeable about non-resident income tax matters.